Why do big companies always end up winning in a crisis? That's today's topic, and welcome to Nova Rice. So, the purpose of today's episode is to help you, let's say, take a look into three important factors that are key in helping your business survive. And, like I've said in multiple episodes in the past, a business is not simply having a storefront or an online business, it's also your real estate portfolio. You have to manage your real estate portfolio as if it is a business. And that also needs to survive in times of crisis. So, to the point, right? So, we talked about different factors that we have to take into account. Which one do you think is the first one, right? So, we talked about keeping all your paperwork in order, tracking your expenses, tracking your finances, so that when it's time to declare your taxes, you have everything up and ready. And especially if you are a big company, when you are that big, you are required to actually file your taxes on a quarterly basis. So, that is kind of an incentive to always stay on top of your finances. Why am I talking about having your finances in order? The same thing applies for when you go to the bank and you want to apply for a mortgage, right? You have to show your bank statements. You have to prove that you actually have a stable income. You have to show that you have good credit. That is not that much different on the commercial side. When you have a business, you have to be able to have all of the paperwork in order because what happens in times of crisis? The government is going to come in like they did recently and they can approve incentives such as the CARE Acts, where we as business owners can get access to loans like the PPP or the EIDL. But what do you think factors in when it's time for you to go to the bank and apply for that loan? For those big companies who are always constantly filing their taxes on a quarterly basis, they're always on top of their finances. All they got to do is just to simply show up to the bank and say, I want to apply for the PPP, and here is my paperwork. But what do you think happens to the smaller business, that business that employs, let's say, on average, three people as opposed to 500 people? So that small business, for the most part, typically will have the business owners doing the accounting, doing the bookkeeping, and doing everything. And what do you think happens to the accounting when you, as the business owner, is taking care of that? Well, in terms of priority, it goes all the way towards the bottom. Why? Because when you're a business owner, you are caring for your customers, you're caring for your sales, you're worried about paying your operating expenses, such as the rent, the utilities, anything that's necessary to keep your business running. Yes, having the bookkeeping is extremely important, but believe me, it won't be at the top of your mind when it comes to things to do. So, what happens in times of crisis? The government can come in and say, well, we're going to approve this act, and all businesses are going to be able to qualify as long as you employ 500 people or less. And here I come in as a business owner with three staff, and I'm trying to scramble through all my paperwork, trying to get my documents in order, trying to keep track of my expenses. And by the time I get to the bank, I already have at least 100 other businesses in line waiting for their loan to get approved. What's the likelihood that the funds are not going to run out? What's the likelihood that me as a small business owners can have access to that? Because let's face it, it wasn't on the top of my priority. So that's one, right? One key factor that you always have to keep into account is to always take care of your finances. The second is all about the relationship, right? Whether you are in business, whether you are in real estate, all businesses are actually relationship based. And why am I mentioning that? You're probably wondering. Well, let's just put it this way. The banks are in business to make money. The banks are not in business to take your house away. They're not in business to take your business away or to take your car away. They're here to make money off of you. And if you are a business owner and all of a sudden you show up and you're saying, okay, I want to apply for the PPP, who do you think they are going to select? The stable business who has managed to employ over 500 people, who has managed to pay their bills on time, who has a very strong credit and has managed to survive year after year after year? Or do you think they're going to lend that money to a small business that employs only three people who manages to get by on a monthly basis? One month they do well, one month not so good, but they can get by. And then perhaps there's a month here and there where they're always in the negative. Guess what? I think you already answered your question. So that relationship, that strong credit history, it is extremely important, right? Because you have to be able to maintain that relationship. And what a better way to maintain your relationship than paying your bills on time, always making sure that your bank statements are on the positive and not on the negative, and also having a good business credit history with that bank. The same applies for when you go to the bank and apply for a mortgage. The very first thing they're going to check is your credit history. So far we have two. We have the first one, keeping your finances in order, and then second, keeping a strong credit history so that you can build a strong relationship with the bank. And third, this has to be a little bit with the animal world. I'm sure you have seen lots and lots of documentaries and, let's say, Netflix or perhaps in the Discovery Channel about how animals behave and how they act, right? And it's always the rule of who's the strongest. Whoever is the weakest in the pack winds up either dying or just simply not surviving. And the ones who are strong, not only they get to survive, but they also get stronger and they wind up passing their genes onto the next generation and next generation. So the first thing, it's applicable to the business world. If your business, it's already on the weak zone, you are barely making it by, you can barely pay your bills. 1 month you're struggling, 1 month you do okay, but on average, you're not the strongest business in the field. Your business resiliency is going to be tested at the time of crisis. And think about this way, right? So back to the example of the two businesses. We have a business who has managed to prove to be strong over the years, over and over. They hire 500 plus people versus a small business, right? So you as a big business, you are already proving that you can afford to pay the loan back to the bank, right? And then if you do get the loan, you manage to save 500 jobs, right? You are saving 500 families from going into bankruptcy, from not being able to pay their rent versus a small business who hires 3 people. And yes, okay, you might feel bad because the business can just cease to exist. And then those 3 employees, they can wind up without a job. But what do you think is going to happen with those 3 people? They can easily come into this company and get a job and be employed. And that way, you're not sacrificing an entire economy, an entire town, and chance the possibility to wind up in a recession or a depression. And that it's in a nutshell why big business always wind up winning long term. And there you go, having one, your finances in order, two, building a strong credit history so you can maintain a strong relationship with the bank, and three, the rule of the strongest. What can you do? What can you do to figure it out? How to make your business strong and position yourself in a way that your business can't survive in a crisis. And while I still have you here, do not forget to hit the like button. And I've also chosen a great episode right here that's going to help you complement everything you have learned just today. And until then, I will see you guys next time. Take care. Bye bye.